Yeah, I think the business loss limitation is really going to be a really interesting dilemma for us. We never had to have a limitation where losses can't be taken just because they're too big or too much. But now with if we have a significant amount of loss, there's a very good chance that you may not be able to offset other income with that loss, and it may have to be carried over. And so therefore, we're going to have to do again a lot of planning with this, because making sure that we understand exactly where those losses are, where they're coming from, if there's anything we can do to minimize or reduce that loss for the current year and push maybe a little more into a future year. But also there's a lot of detail to that general rule of loss limitation of what is the loss. It may not really be the loss that you see on the tax return that's limited. So there are a lot of things that, again, we need to look at to be sure of that.
And the loss, when it's limited and carried over to the next year, carries over as a net operating loss, which is a different type of deduction than the business loss. And so the following year, the limitations on the loss are calculated differently than they are in the year that it's generated. So it really does get complicated to see what the effect is over multiple years.
Used to, if you had someone who made $1 million in one business and had $1 million loss in another business, I know that's an extreme case, but they really kind of would net each other and they'd end up with basically zero tax. And now that probably won't happen. Now you're probably going to end up with the income you're going to report, but you're going to limit that loss significantly, and you're going to pay, even though you didn't really, those two businesses netted to zero, you're going to pay a significant amount of tax now in 2018 and beyond. So it's going to change the game.
Correct. And so I think the main businesses that we're going to see this impacting primarily are Schedule C's, Schedule F's.
Farms and cash basis taxpayers that have a lot of fluctuation in income. We're accrual basis, a lot of times we're a little more steady, but the cash basis taxpayers have wild fluctuations in their income, and so that's really, I think that's where we're going to see some of those losses.
Some of these limitation provisions like this were some of the things that they put into the Tax Act in order to help pay for the rate cut. A lot of the tax rates went way down, and in order to pay for that, they've had to adjust some of the deductions out to reduce the effect of the rate cut.